The Swedish economy has so far shown resilience to the debt crisis in Europe, but now their exports are being dampened by the weak activity in the euro area. Today I am joined by Johan Javeus to discuss the all-important rate decision by Sweden's central bank as a tough economic climate takes its toll. So Johan, Riksbank decided to maintain repo rate at 1.25. Was this in line with your expectations?
Yes, you could actually say that the whole decision was very much in line with our expectations and also with the expectations that were in the market. Most analysts had expected unchanged rate today, but also that the Riksbank would use their interest rate path, which is their forecast of the repo rate going forward, to indicate that there will probably be a rate cut at the next meeting, which takes place in December, and that was actually what the bank did.
The announcement comes just a week after the Riksbank board reportedly disagreed over whether Swedish unemployment should guide policy instead of imbalances in the housing market. But what do you think is the most important factor affecting the Swedish economy at present?
Well, I would say that this article in the newspaper last week, it really did shake up market expectations ahead of this meeting, because before this article was published there was very much expectations in the market that there would actually be a cut today. But the central bank governor, Ingves, he went out and basically indicated very clearly to market that given that there is still a risk of too much lending among Swedish households, he was reluctant to cut rates too low because he saw risks with that. And that sort of changed perceptions about what the Riksbank would do today. Nevertheless, of course, lending and excessive credit growth has been a problem in Sweden in the past, but as lending has moderated and the Riksbank actually continues to think that it will, or the Riksbank thinks that it will continue to moderate going forward. So we don't see that as the decisive factor anymore. It's very much a focus on what will happen with the economy and of course with inflation. And since the economy is slowing and inflation is also slowing, there should be room for further rate cuts going forward.
As you mentioned, the central bank did indicate that there may be a further rate cut before the end of the year. But do you think this will be enough to curb inflation worries? The
concern in Sweden, as in many other places today, is that inflation is too low. Inflation is about a percentage point below what the Riksbank's target is aiming for. And we don't see any big pickup in inflation going forward now. So most likely the Riksbank will continue to undershoot its inflation targets during 2013. And even if they do cut interest rates a couple of more times, it's unlikely to have such a dramatic impact on inflation, at least in the short term. So in that case, I think that the Riksbank will have to struggle to get inflation up to the 2% target over the next 2 years.
Despite the cautious approach by the central bank, earlier this week, S&P affirmed Sweden's AAA rating and predicted real growth in 2013. What are you expecting from Sweden moving forward?
Well, there are quite a lot of signals in Sweden now that growth is slowing, and we see particularly trouble in the export sector, and we've also seen a lot of layoffs in industry in Sweden, and the labor market seems to be softening. And thus we should expect growth to be quite low. We have an expectation for next year of 1.5%. The Riksbank is slightly more optimistic than that. But nevertheless, the growth outlook is not very strong in Sweden going forward. This said, of course, there is still a very good order in Swedish public finances. So even if growth would slow a little bit further or remain slow for the next year, we don't think that this is something that will impact the perception of Sweden as a very creditworthy nation. So the AAA rating is very secure in that sense.
And finally, how do you think all that you have discussed will affect the Swedish krona in the short, mid and long term, and what will be the main factors driving this currency?
The Swedish krona has been seen during the euro crisis as a safe haven currency to which investors have wanted to allocate more of their funds, as it's a non-euro currency and it's also situated in a country which has very strong fundamentals, very much like Switzerland in that sense. So this has been the main driver of the Swedish krona during the first half of this year, driving the Swedish krona in the strong direction. What we've seen in recent months is that this strengthening trend of the krona has moderated and to be frank, been partly reversed. And that is very much connected to the softer growth signals that we've had, especially for the export industry. And our prediction now going forward is that it's going to be a tug of war between the euro worries, the safe haven arguments in favor of the krona, and the business cycle softening in Sweden and elsewhere, which is speaking against the krona. Our prediction is that we will still see a krona which is very much around the levels that it is right now against the euro, but perhaps with a tilt towards further strengthening.
Johan, thank you very much for sharing your perspective. Well, that's all from Johan and myself, but click back to Dukascopy for another exclusive interview looking at the Mexican peso with my colleague Thomas Taplin. Bye for now.